Hey, it's Stuart. My question of the week is from Rob. And Rob asks about how do you assess a property performance? He says he meets with his property advisor every year and he wants to know what questions should he be asking. And it's a great question, Rob. Thank you so much for submitting it. It's a difficult one because we often invest in property primarily for compounding capital growth, but we realize that that capital growth isn't received uniformly each and every year. So, of course, you're going to have periods of time where the market's relatively flat and periods of time where the market's strong. The way I like to think about it is there's two attributes to sort of focus in on. The first one is the property's income, and then the second is the property's performance in terms of capital growth rate. With respect to income, it's asking questions like, is the managing agent doing a good job? Are they on top of maintenance requests from the tenant? Are they looking after the property? Are they helping me with all the compliance issues? Then another question would be, what improvements can I make to this asset that are not only going to enhance its value, but also enhance its income profile? So can I put in an air conditioner? Does the kitchen need a little bit of a facelift? Doing these sorts of things that are actually going to help you increase the rental income. Of course, if they don't increase the rental income and they're unnecessary, you wouldn't do it. Having a think about what other maintenance things that you might be committed to might occur over the next 1 to 2 years and how are you going to fund that? So again, it might be a significant renovation. Well, of course, you're going to have to fund that in some way. You can think about what is the most tax effective way to do that. And are you minimizing any interest costs? So, of course, there's a lot of costs associated with holding an investment property, things like insurance, management, property management, that is, council rates, all those sorts of things. You can't really influence the price. But your biggest outflow is probably interest if you borrowed to purchase the property. So it's always good to think about, are you minimizing the interest rate? Is your debt structured effectively? Are you maximizing any tax benefits associated with that? That's the income side of things. Now, with respect to the capital and the capital growth of the property and assessing that, as I said, it's really difficult because growth might happen sporadically. You might have a 5-year flat period and then the market might go gangbusters for another 5 years. So really the best way that I like to do it is I like to compare the growth of that particular asset over the last 5 to 10 years to the relative to the broader market. So for example, I know that the median house price in Brisbane since the end of 2018 is appreciated by about 60%. So then if my investment property was in Brisbane, I would have a look and what do I think that asset was worth at the end of 2018? What do I think it's worth now? And I want to make sure that I'd want to see that it's worth at least 60% more, that it's kept up with the market. And hopefully, if I've got a really good quality property, it's done better than the market. Now, I wouldn't look at what the performance was over the last 12 months because to do that, you need to accurately ascertain what it was worth 12 months ago and what it'll be worth today. And that's just too subjective. And so the data that you get from that analysis will really greatly depend on how accurate you were with those values. And because it's so subjective, it's not very reliable. Instead, look over the last 5 years or even perhaps 10 years. And if you do that each year, you can update those longer term growth numbers, again, compare it relative to the market. The reality is it's either a great asset or it's not. It's either got the fundamentals and attributes that are going to drive capital growth. If it is, then it's really just having the patience and time will do its thing and that property will appreciate in value. But it is difficult. Unlike a share portfolio, there's lots of benchmarks you can reference on a sort of 12-month basis. A little bit more difficult with property, but certainly that's the approach we take. Hope that helps. Thanks for your question, Rob. Cheers.